Well, folks, for me to be recording a video at 10 o'clock at night, you know some drama's got to be going on out there. And oh boy, do we have some stuff going on out there. I'm going to cover, obviously, what you should be doing in this situation, what I'm going to be doing in this situation. I'll be covering all that in this video here today, okay? All I need from you guys, smash that like button. I appreciate you joining me for a late night special, or if you're watching this, maybe it's got an early morning special for you, okay? So Israel strikes Iranian nuclear and military targets in an unprecedented attacks. One of Iran's most powerful men, Major Salami, was killed in the attack. Salami man was killed. Obviously, if you're looking for me to tell you exactly how this whole situation is going to play out, I have no clue. This is not my realm, right? I could tell you what's going to happen in the market. I could tell you what's likely to play out in the market. I could tell you what's going to play out in stocks, things like that. But how something like this is going to go, it's not my thing. Okay, I'm no expert in this, and honestly, even the experts in this industry, they're not going to be able to tell you exactly how this goes. Okay, I can tell you what to do. First thing in the morning tomorrow, gas up your vehicle, max, gas it up with as much gas as you can fit in that thing tomorrow morning. You need to do that. And I know probably 90% of the people watching this video right now, you drive an internal combustion engine. Fill up your car tomorrow. Fill up your car, because I bet you by the time, even tomorrow afternoon, I bet you gas stations will start going up on price. And especially like over the weekend and into next week, gas stations will start going up on price. And, Iran said Israel and America will pay a heavy price. And I just posted this on my X page, by the way. If you ever want to follow me on X, I always have it linked in the description area of my channel, right? I said, this is somewhat true. Heavy price. Oil prices are skyrocketing right now, which we're about to go over. Americans are about to pay a much higher price for a gallon of gas over this next few weeks, next few months, right? And I also asked folks, how much they're paying for a gallon of gas right now. And I asked you guys, how much are you paying for a gallon of gas right now? I would love to hear from you guys in the comment section if you want to post it down there. My guess is you will be paying a much heavier price in just a few days from now, never mind a few weeks from now, than what you would be paying, today, or if you have ability to go gas up tonight, go gas up tonight. Do whatever you got to do. But that's an easy win for you right there. You'll probably save at least a few bucks, if not, $5 or $10 in regards to this whole matter, right? Now, in regards to the market, obviously the market doesn't like this. S&P 500's going down, about 1.5% so far. Nasdaq's gone down even more than that. And then if you look at the Russell 2000, it's gone down even more, quite a bit more. I mean, we're talking about a full percentage point worse than the S&P 500. And so you got to say, why is the Russell getting hit a lot harder than the other indexes? Like, the Russell hit is so much more severe, right? We'll come back to that in just a moment. I'll explain exactly why the Russell's getting hit much heavier than the other indexes. Now, crude oil futures right now are up 9.6%. Here's the deal. If this situation gets a lot uglier, you'll see crude prices touch an 80 handle very, very shortly here. That's if things continue to accelerate to get worse than where things are at right now. You'll see an 80 handle on crude oil like that. It'll happen quick, like really, really quick. Now, if this is all that happens and things die down and that's that, and there's not a back and forth here, then crude oil can kind of settle out in the 70s for a bit, and it'll be an observed situation where they'll look at it and they'll say, okay, there's not too much more conflict going on, so there's not a reason for crude to keep spiking. But I can tell you, if there's going to be back and forth here, crude will keep spiking, and you'll see something with an 80 in front of it very, very shortly. And then if you see another acceleration, you'll see $90 to $100 crude in a matter of a few weeks from now. But that is only under a situation where this gets much more severe than what we've seen so far. So do keep that in mind, okay? So, I've seen crude price on these conflicts before, like, explode to the upside, and it's not just a little short move here. Now, where this matters significantly to the market, you may say, Middle East, like, this is not the first rodeo with something going on. Why is the stock market starting to freak out over this? And why is the Russell getting hit so hard? Well, to explain that, I take you to GSG. GSG is a commodity basket. Okay. Now, GSG is going to tell you if you're going to likely face a lot of inflation in the economy or not. Everybody should always track GSG. It should be on your watch list, okay? If you look at GSG over the past year, it's up a whole whopping 1.7%, which is nothing, which means inflation's dead. And that's exactly what we've seen in the CPI data. But if this GSG starts to explode to the upside, that's when you start to have real inflation start to come, because guess what? Everything in this world ends up coming back to. It all ends up coming back to commodities. You can't make a single thing in this world without it end up, if you go to the origin of how this thing is about, it goes back to commodities. And so if commodity prices explode to the upside, what ends up happening is CPI ends up exploding to the upside. There's a little bit of a lag there, but it's just what happens. And so, for instance, if you want to know why did we have such insane inflation, like out of control inflation in 2022? Well, I can show you exactly why. It wasn't just the fact that the Fed kept interest rates too low for too long and the stimulus and all that. It was much bigger. Look at this. The GSG went from, we can call it about 10 or so, right? And at the lows, it got even a little bit lower than that, kind of in that 2020 time. But we can say it went from about 10 to GSG exploded to summer 2022 to 26. That's one of the biggest bull runs we've seen in commodities history, folks. History. When you're talking about that sort of explosion upside of commodities, you're going to talk about inflation is going to go out of control. And that's exactly what happened. Inflation went completely out of control. The CPI went out of control. It was the worst we've seen in decades and decades and decades, right? And obviously, inflation's chilled out a lot over the past few years. You've seen it in random places here and there, right? Some in housing still. That's even died down now at this point in time. But it was a issue, at least in 23 still, rents and whatnot, right? You've seen it in like car insurance, stuff like that, still even in 2024, right? But at the end of the day, like the massive amount of crazy inflation we had really died down in a substantial way, and it's been dead because GSG. Now, if you play this out, let's play a little chess here. The Russell's getting hit harder because if there's more fear of inflation, CPI going higher, then that means what? That means the Fed might not be able to lower rates. Everybody's, kind of expecting the Fed to lower rates. Well, if people start fearing that inflation might explode to the upside because all of a sudden, gas goes high and then a bunch of other commodities start to spike, right? Because we know the Middle East is huge on several different commodities, but certainly we all know crude oil, right? Well, then all of a sudden you start to worry about inflation coming back. And then and then obviously there's already worries about inflation potentially coming back later this year because of the tariff situation. So you have commodities with tariffs, then people start saying, oh gosh, what if the Fed's not going to be lowering? We're all banking on the Fed starting to lower and start another lowering cycle here in the next few months. What if they don't? Because all of a sudden you have GSG explode to the upside, and then we got the tariff drama on top of that. Oh boy, right? And so that's why the Russell is getting hit harder than the other indexes, because people are, the Russell's always much more dependent upon interest rates. At least that's the way it's viewed. If, interest rates are higher, people don't want to own the Russell. If people are more confident that interest rates are going lower, they'll gladly buy the Russell. And so if you look at the Russell over the past, certainly since that April bottom at 1,700, it's made a nice move to the upside. And one big part of that is certainly people are expecting rates to go lower, right? So that's kind of some of that part of the game, right? And this is, by the way, this is CPI and the latest numbers, 2.37 in regards to that, right? Now, what am I thinking about doing in this situation personally, right? Well, let's think about this logically, okay? I actually told my 10-year-old about the whole situation when I heard the news come out hours ago, and I told him, essentially there was an attack and whatnot, right? And he said, why'd that happen? And I told him, listen, son, I can't explain this to you. The Middle East has been in a lot of battles for a long time. And these things go back hundreds of years, thousands of years, long before anybody watching this video was ever here. And there's still going to be conflicts long after everybody that's watching this video is not here anymore. And we're all in the dirt, okay? The Middle East has been plagued with conflicts in wars for a long, long time. And I unfortunately, I don't see that ending, right? Like it always happens. And so if you look, this is just the list of conflicts, wars, just in the 1900s and after. We're not even talking about, we don't even have to go back, hundreds of years or thousands of years to talk about all those conflicts of the past. This is just the 1900s and after. And look at the amount of conflicts, wars, things that have transpired in the Middle East. It's a long, 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 long list. Oh my gosh, we finally got to the end of it, right? So what are my thoughts here? Like, I have to buy, in regards to the market, because at the end of the day, like, this is not the first rodeo. This isn't going to be the last rodeo in regards to this. And so, yeah, it's a bunch of drama in the short term, but at the end of the day, I'll have to be out there buying, right? And a big part of me is like, I buy every single Friday, regardless of what happens. If there's something happens in the Middle East, if something happens in the United States, Trump says blah, 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 whatever, I'm out there buying, right? It could be a good feeling market, bad feeling market. I buy every Friday in the Patreon portfolio. I buy in my private portfolio. And additionally, I buy in the public account every Friday. Unless it's a holiday, then I'll buy it on a Thursday or something like that. But that's just the name of the game. So am I going to change my game plan because of this situation, because of these Israel strikes? The answer is absolutely not. I'm not changing how I operate because something over there happened. No. Like, how that all will play out, who knows? We'll see. Like, only time will tell, right? Maybe it gets much, much worse. Maybe it gets better. We don't know. But the moral of the story is, I'll be buying out there tomorrow, as I do every single Friday. And we'll talk about what type of stocks and all that in just a moment. But, if you look at my Flapjack Flipper Resort, I put this illustration for a reason for this video. Number one, build a portfolio to be proud of years from now. The Middle East stuff, like, this conflict could be over tomorrow. It could be over weeks from now. It could be over months from now. It might take years to solve this. I don't know. But the moral of the story is, I've got to build a portfolio that I'll be proud of years from now, right? And at the end of the day, there might be some new conflict in the Middle East 6 months from now, a year from now. Like, that's just is what it is, right? Stay diversified is your alpha long term. Because of this conflict, I'm not exposed in some way that it's like, oh my gosh, this is going to devastate my whole portfolio. I'm ruined, right? Staying diversified is your alpha long term. Growth, value, dividends, hedge, cash. I just built some cash here literally like 2 days ago. I just shared with my private stock group. I had sold some stocks, built some cash. It felt like something was going to happen, right? And, you kind of get a little feeling around this when you've been in the market longer, right? Conference calls, non-negotiable, right? We just added a new feature on 1000X here today, AI transcript conference calls, so valuable. I'll show that to you guys in the future, right? And I know my stocks, financials, their metrics, all that stuff, and look at 8 and 9. Buy the dip, never trip. Like, at the end of the day, this is what it is, right? So what are some stocks I'll be looking at in the morning to potentially buy? And obviously, I'll cover that in my private stock group. I'll cover that on Patreon as well if you ever want to join me for those. They're always linked in the description. But I'm looking at Adobe. I really like those Adobe numbers. I'm looking forward to listening to a conference call. I would be listening to a conference call right now, the replay of it. But since I'm doing this video for you guys, I gotta do this. And then I'll look forward to listening to that in bed tonight. So, I got to listen to the conference call, but from what I saw in the numbers, the guidance, it looks really good. Really, really good in regards to Adobe. Love that one. Love the valuation that one's trading at right now. And so Adobe could definitely potentially be a buy in the morning. AMD. So AMD went down on their day here today. Wall Street still doesn't get it. I might do a full-scale video on AMD tomorrow on the main channel. I might. Main channel might be getting an AMD big dog video tomorrow. I would say 80% probability. I'll put it at that. We'll put odds on it. 80% probability, main channel financial education tomorrow. I'm going to do a big dog AMD video because I think it deserves, because everything that transpired today, it's a lot. And for retail investors, us average Joes, I think what happened today was huge on several different fronts. Wall Street doesn't get it. They're going to get it. And they're going to be forced to get it. And you know why? Because AMD numbers are going to show that you got to get it. And so when the numbers, after this next quarter they report, when you hear that guidance number, and then we see the following quarter's numbers, Wall Street will start to get it then because the numbers are going to start hitting. Remember, they didn't understand If they understood NVIDIA, they wouldn't have sold NVIDIA stock off 50% in 2022. Remember, NVIDIA sold off like 50%. They would have been buying that stock left and right if they knew everything that was coming. But they didn't understand NVIDIA. You know when they started to understand NVIDIA? When those numbers exploded. And then all of a sudden they're like, NVIDIA, looks great. If they really understood business models, it's the thing, like people, especially a lot of newer investors, they have this assumption that like Wall Street's so smart, they understand these companies so well. Dude, they don't know freaking anything. If they knew like how these businesses worked, do you think they would have sold Meta down to $88 in 2022? $88. If you think Wall Street knew what they were doing, you think they would have sold NVIDIA down 50% in 2022? No, they would have been buying those stocks hand over fist. They would have been plowing money. They wouldn't have been selling. They would have been buying. Instead of what were they doing? Selling. And so just understand, they don't understand these business models. And so with something like AMD, don't get down about what happened today. Like Wall Street doesn't get it. They will get it because Lisa Su and the team will be putting up such great numbers in the back half of this year and going into future years that Wall Street will have no choice but to get it. Because they'll see the numbers. And they'll be like, AMD, I love that. Wow, what a great company. Wow, man, what they're doing special. That that MI 400 chip they got. Oh, boy, the MI 355, 5555. Oh, man, that's a good one there. Nike's another one I'll be looking at tomorrow. Does this Middle East stuff, does this have anything to do with Nike? No. But I wouldn't be surprised if the stock's down tomorrow, right? So I'll certainly be buying some stocks. Now, there's a video I want to go ahead and react to here that I meant to react to this one on my reaction video earlier on the channel. I'm not sure if you guys got to see this one. This one stock's a game changer. I reacted to a bunch of different stuff. That was a beast video, 49-minute video. But I meant to react to this Dan Niles one as well, but I didn't get a chance to, and that was already a 49-minute video, so it was kind of a beast in general. But I want to react to this Dan Niles one. Looking forward to getting into this with you guys here.
In New York since COVID. Really?
Yeah, I mean, the last time I was on set was January 27th of 2020. And I remember that was the day Apple reported. And I remember being on set and they were like, well, what are you thinking? I said, I think this COVID thing is going to be a big deal. And I'm not going to be. And then I think it was Carl Kinton, he asked me, what do you think of Disney? Because it had come down a little bit. And I said, I'm not interested in that until they shut down every single one of these parks. And then I looked stupid for about 2 weeks. And then I didn't look so stupid.
Wow.
So.
Oh my gosh. So the moral of the story is every time Dan Niles goes to CNBC, something really bad happens. Holy smokes, man. Come on, Dan Niles. We can't have you go down there anymore. You hadn't went down there since Rona, and then you go down there, and next thing you know, front page of CNN, we got all this drama. Come on, man. What in the world? Sheesh.
Oh.
I remember that trip very well.
Big proclamations this time around?
Yeah, the big one.
Imagine he's like, yeah, I feel like tonight, like, Israel's going to strike Iranian nuclear and military facilities. Like, I feel like Salami's going to get taken out tonight. Imagine he says that right now. Oh my gosh.
For me is really simple, which is you had U.S. GDP in Q1 come in, and the part that I don't think people paid enough attention to is U.S. GDP is 25% of global GDP. Mm-hmm. You had imports up 41% in Q1. Now, if that's not pull forward in demand, I don't know what is. And that's the reason why Q1 results for all of these companies came in well. Because don't forget, in the fourth quarter, when they reported Q4, 6 of the 7 Magnificent 7 companies had revenue estimates get cut for March. There's a reason things sounded so good when they then reported the March quarter. So you're going to get payback in the Thanksgiving through Christmas time period when people are expecting, big sales of smartphones or PCs or cars, things that people bought in advance, because consumers aren't stupid. They go, well, gee, if I've got tariffs coming, maybe I should buy a few of these things I was thinking about that are high-priced goods in advance. And so that's why you're seeing companies like Apple doing well. In terms of the results they're reporting, I think they're going to have another good quarter. But when you are expecting 30 to 35% of your revenues in just the month of November and December for most, consumer electronics companies, et cetera, I think you're going to see a big disappointment because the numbers haven't been moved down because they came in good for March.
So you're still bullish in the short term, but longer term, heading up towards November, December, around Thanksgiving, you're looking for the market to catch up to that reality as you see it?
Yeah, because right now, I mean, let's face it, we're human beings, right? You want to believe you're going to get through COVID fine. You're going to get through a financial crisis fine. You know, people are going to have kids. There's going to be productivity improvements. I'm doing an event later today talking about that. And so investing is just basic faith in humanity's resilience. So you want to believe, CPI came in low. Oh, PPI came in low. That's good. Oh, Micron's going to spend $100 billion or whatever they announced this morning.
I think they just said $150 billion, and it's going to create some 90,000 jobs, but they didn't put a time frame on it.
Well, of course, that's the great thing, right? You don't have to put a time frame. It could be over the next 100 years. Who knows, right? But the point is that you want to believe all that good stuff and not think about, well, when you have 25% of the world's GDP up 41% in terms of pulling forward demand, might that have an issue later this year?
So as a result, in your hedge fund, are you...
So I got to push back against one thing here Dan Niles is talking about, because this is very important. He keeps kind of making this point, and I've seen him go on CNBC a few times, obviously not go down there. It's a rare time he's actually there in person, but he keeps making this point about pull forward to demand and companies ordered all this stuff and whatnot, right? Which is fair, but all that stuff they ordered did not just all get sold through to the customer right away. It's not like the customer went out there and bought 40% plus more stuff than they usually buy or things like that, right? That was just companies getting ahead of it, saying, hey, let's fill up the warehouses, let's get all our inventory in, and then we can worry about, selling that to the customer afterward, right? And so could there have been some level of pull forward of demand? Sure. The tariffs are hitting. Oh man, I better go buy an iPhone now. They're going to, but it's a very small level. It's not like to the level where, I feel like he's kind of thinking about it in his head that this, like he mentions this 40% number and things like that. Like, no. Micron, by the way, this is a big deal. Micron to expand U.S. investments to $200 billion in manufacturing R&D. That's a huge deal for Micron. But man, the thing with MU, man, they're spending a lot of money.
Selling?
They make a lot of money, though. That's a good thing for them. They make a lot of money, but man, they spend a lot of money.
Some of these stocks, let's go specifically. Do you sell NVIDIA based on this? Do you like NVIDIA?
Yeah. So here's the thing. I think you got to take the Magnificent Seven and split them completely apart. So with NVIDIA, we've been talking about since the middle of last year, we thought there'd be a digestion phase because training demand was going to flatten out. NVIDIA stock went down 49% from peak to trough, right? And you did see training demand start to level off. We wrote about, I think in April, that we really liked NVIDIA again because now you are seeing inference, which is it's answering your questions, like where do I go stay if I'm going to Mexico on vacation, blah, blah, blah. And so you're seeing inference demand really take off. Google's talked about the tokens they processed being up 5x in Q1 of this year versus a year ago.
And by the way, this is huge for AMD. And once again, I probably need to put together a full-scale, very in-depth AMD video on the main channel tomorrow. But this is huge for AMD because AMD, the way Lisa Su's positioned the company is actually for the inference opportunity the best. Like AMD was not positioned for the training cycle. NVIDIA was ready for that. And Jensen and his team, hats off to them. They were ready for the training cycle, and they've made fortunes of money from that, right? Lisa Su and the AMD team, they weren't really positioned for the training cycle, which they didn't benefit from. But now we're moving into the inference cycle, and I can tell you, this one's very different. Lisa Su and the AMD team have positioned very well for inference, which is the much, much, much bigger, huge, like night and day bigger opportunity from my understanding in regards to this industry, based upon what I've heard from Jensen, based upon what I've heard from Lisa Su and other experts in this industry, and just logically, inference should be exponentially bigger than the training cycle was. And that's something that honestly is going to play out over the next 10, 20 years. It's not like that just plays out over a year or two. That's going to play out over the next 10, 20 years. And so AMD is very well positioned here. Are they going to beat NVIDIA? I don't know. I don't think anybody ever beats NVIDIA. but they don't need to beat NVIDIA to become $1 trillion or $2 trillion company. That's what people got to understand about AMD.
And I'm using Gemini and Grok probably 20 times a day.
Like NVIDIA's they're trying to grow their market cap to 10 trillion. That's the thing you gotta understand. Like NVIDIA's already like a $3.5 trillion, probably on their way to $4 trillion market cap. NVIDIA's now trying to grow to a $10 trillion market cap. AMD's on their way to becoming $1 trillion market cap. There's a big difference there, right? It doesn't mean one's better than the other. Well, it does. AMD's better.
Now, where a year
as an investment
ago, not that often.
Yeah, I'm using Perplexity and Chat.
Yeah,
GPT.
exactly. And I think, Joe's probably using whatever he likes best. So all that usage is cranking up. And ultimately, that's what you want this for.
Joe's like, I read a thesaurus. I don't know what's going on.
You're not interested in like the trained model. You're interested in getting answers.
Right.
And so I think with NVIDIA at a 35 times PE, and don't forget they had a big write down. That's great because you've basically taken everything you were concerned about, tried to throw it into the write down. And don't forget their margins were under pressure for 6 months. They're going to be de-risked. I like NVIDIA at these
What about
prices.
Microsoft?
Microsoft's the other one I really like. So those are the two out of the Magnificent Seven. There's a simple reason for it. Microsoft was invested in OpenAI in 2019. This is before any of us had even heard of ChatGPT. And so their revenues for Azure, which is their cloud business, actually after disappointing in June, disappointing in the September quarter, disappointing in the December quarter, that's why I was worried about digestion. You get into the March quarter, their revenues actually accelerated by 2% in March versus December for Azure. For Google and for Amazon, which is the largest, their revenues actually decelerated by a couple of percent.
Yes, but to push back against Dan Niles here, Amazon, from what I remember, is expecting an acceleration back in that business again. So I do think that's worth mentioning.
Okay. So after 9 months of disappointment, they're, I think, starting to benefit. And don't forget, they did this Stargate initiative where they said, we don't have to take all of the OpenAI traffic. All the stuff we don't like, we have the right of first refusal. We can turn it over to somebody else. And we haven't talked about Oracle, but Oracle obviously last night had huge numbers driven by this inference as they look forward for this next fiscal year.
All right, Dan, I'd love to continue through the rest of the Magnificent Seven, get your thoughts on it. We're out of time, but you did mention that you're going to be headlining at this event coming up later today. That is the first.
Yeah, Dan Niles was really bullish on Meta last year. I think he should still continue to be bullish on Meta, just to be quite frank. Oracle's one that frustrates me a little bit because I thought about investing in that one that would have been about a year or two ago now at this point in time. And I thought considerably because the valuation looked very, very attractive. And I looked at the business model and like their growth rate should be very strong. The one thing that kept me out of Oracle was the balance sheet. Balance sheet really trash over there at Oracle from what I remember. Like had a fortune in debt from what I remember when I looked in the company. That was the one thing that really turned me off. I'm like, I like their business model. I like what they got going on. I like their future growth opportunity over this next 5-10 years. But the balance sheet was an issue, and the valuation looked attractive. But anyways, that stock's doing pretty well. Not better than other stocks, but it's doing pretty well for itself. Okay, appreciate you guys joining me as always. Thanks so much for being here. Late night video for you or early morning. If you want to catch up on some other videos here on the channel. Oh, by the way, thanks for all the people that are the channel members and support the channel. I appreciate you guys that are the channel members here. But yeah, you might want to check out some of these other videos. My number one stock has gone nuclear. This one stock's a game changer. You might want to check out that. And then on the main channel, I got some videos for you recently that are really interesting. And then if you want to follow me on X, I have that linked in the description area if you want to follow me on there. All right, guys, much love as always, and have a great day.